Thank you.
You're in charge.
Thank you. I'm sorry I don't speak Romanian, so I'll switch directly to English. And before the start of our panel, which will begin by plenary speech by Dezvoltarea Romaniei, I think we have a short video clip that was prepared by our colleagues here in Bucharest. And without further ado, I will ask you to join me and watch that short clip.
S-au lansat greu, abia în 2008, după ani buni de pregătire, însă imediat pensiile obligatorii administrate privat, cunoscute sub numele de Pilonul 2, au înregistrat randamente investiționale de top, performanțele fiind apreciate chiar la nivel internațional. De exemplu, conform unui studiu realizat de Federația Europeană a Consumatorilor de Produse Financiare, fondurile de pensii de la Pilonul 2 au avut, în perioada 2008-2015, cele mai bune randamente reale dintr-un panel de 15 state membre UE. Mai mult, conform datelor Asociației pentru Pensiile Administrate Privat din România, randamentul cumulat al pilonului 2 a ajuns spre sfârșitul anului trecut la 131,5%. Randamentul cumulat al pilonului 2, creștere voan, de la lansare. Această performanță se datorează și legăturii strânse care este între fondurile private de pensii și BVB. Fondurile de pensii private obligatorii, Pilon 2, aveau active nete în valoare de peste 10 miliarde de euro la 31 decembrie 2018, în creștere cu 19,7% față de nivelul din luna similară a anului precedent, însă în scădere cu 1,2% față de luna noiembrie, conform informațiilor publicate de ASF, Autoritatea de Supraveghere Financiară. Primele trei fonduri cu cele mai mari active sunt NN, 16,96 miliarde de lei, AZT, viitorul tău, 10,31 miliarde de lei și Metropolitan Life, 6,78 miliarde de lei. Titlurile de stat dețin cea mai mare pondere în cadrul activelor, de 30,35 miliarde de lei, respectiv 63,77%, fiind urmate de acțiuni cu 8,3 miliarde de lei, 17,45% și depozite bancare cu 3,91 miliarde de lei, respectiv 8,23% din totalul activelor.
Pilonul 2 a avut un rol crucial, cred, în dezvoltarea bursei din România în ultimii ani și din acest motiv cred că este de neconceput o dezvoltare în continuare a pieței de capital și a României în ultima instanță, fără o consolidare a dezvoltării pilonului 2 de pensii private.
Pe termen lung, lipsa unei strategii coerente în ceea ce privește pensiile administrate privat poate avea implicații și mai grave. Peste 20 de ani, piramida demografică a României va avea o structură care va exercita o mare presiune pe sistemul public de pensii, din ce în ce mai puține persoane active vor trebui să asigure veniturile unui număr din ce în ce mai mare de persoane inactive pe piața muncii. Pilonul 2 de pensii, unde banii sunt economisiți pe termen lung, va putea prelua o parte din această povară financiară.
Cred că e nevoie de dialog cu guvernul, nu facem acum o concurență, ci cred că trebuie doar să discutăm, să vedem încotro capital românesc o ia și de unde se finanțează.
În cei aproape 11 ani de la lansare, autoritățile au adus mai multe modificări pilonului 2 de pensii. Cele mai recente vizează chiar o formă de naționalizare. În Europa, statul polonez a recurs la modificări semnificative a arhitecturii sistemului de pensii, însă cu rezultate dezastruoase. Experiența poloneză demonstrează încă o dată că este necesară organizarea unor consultări reale, constructive și temeinic fundamentate înainte de adoptarea oricăror decizii, al căror impact poate afecta calitatea vieții a milioane de români.
Okay, thank you for that clip. And without further ado, I will hand the floor to Dezvoltarea Romaniei, who is the president of the National Association of Polish Pension Funds. To you.
Good afternoon. Thank you very much for the invitation. Maybe I'll go down, it will be closer to you, and I will try today to tell you briefly about what is going on in Poland right now. Well, we saw the Polish information a little bit, Warsaw Stock Exchange, and well, at the beginning I would like to thank you for the invitation. I'm very glad to be here, not only because I like Bucharest, but I think that it is the first time since a few years when I can say internationally, something positive about Poland. Maybe I will not start positively, but I will end. And I do hope that it will help you also with your internal discussions. My idea is to tell you about the landscape in Poland, very briefly what happened before 2018, what we were doing during the last 2 years, where we are now, and what will happen in the next few months and maybe in the next 2 years. So, maybe some of you know pension funds in Poland were established in 1999 as obligatory system, capital part of the pension system. And during the next years, many changes were introduced to the legislation. However, in 2010, we began to have serious discussions with the government about changes in the fee, for example, and also about macroeconomic problems and challenges with the public debt and deficit that we were facing at that time. It was not in 2010 so serious. Together with the government, we established some kind of plan for changes. We agreed to decrease the contributions paid to the pension funds from 7.3% to 2.3%. However, in the next years, they were supposed to raise. It was also agreed in the legislation. We agreed to lower the fee that were paid to the pension funds, about 50%, and we agreed that there will be presented ban on advertisement and, on active acquisition of members on the second market. So those changes came into force in 2012, then in 2013. We faced, as a country, a very serious problem regarding public debt. We were very close to this level that was forbidden from the European point of view and from our national legislation. The answer at that time from the Ministry of Finances, our government, was very simple. We should take the money from the pension funds. It will be the easiest way to answer all the problems. After trying to show the consequences of this step to the government, still the Ministry of Finances, together with the government, didn't agree to leave pension funds as they were, and they decided to take 50% of assets in the pension funds that were located in the treasury bonds to the budget. The rest stayed with the pension funds. I'm sorry, I think that something happened with the presentation. It's not mine. Okay, maybe I'll try to say and someone will solve the problem. So in 2013, the new proposal of Act appeared. It was few new solutions presented at that time. As I mentioned, 50% of the assets in the treasury bonds were moved from pension funds to the budget. We had so-called ban on advertisement, so we couldn't encourage people to join the pension funds because, in favor of this act, pension funds were no longer obligatory and they became voluntary. So it was the other solution. We were also forbidden to invest in treasury bonds. So hello, Poland is the only country in the world that cannot invest as it comes to the pension funds in treasury bonds. However, the most demolishing from our point of view was so-called the zipper. It means that 10 years before the retirement age, which is 60 for women, 65 for men in Poland, gradually we transfer as a pension funds to the social security institution, well, to the budget, all assets of the person who is, as I mentioned, 10 years before the retirement. It means, in fact, that right now pension funds in Poland are payers netto to ZUS. So it means that we take from our new clients less than we have to pay to the social security system. Automatically, it means that we need money for this. If we need the money for this, we need to sell equity, because right now we have 86, more even than 86% in equity, the rest in corporate bonds and other in other papers. And after that, the government, also had to face some consequences. We became, and we were in the situation in which people lost their trust in the pension system. I mean, really totally. When you look at different researchers presented by different universities, other institutions, people in Poland after 2013 totally lost their trust in the national pension system. They believed that the money in pension funds are private one, and that the government decided to take them from this. If the government at that time decided to take the money from the pension funds, it means, from the Polish perspective, that they can also take the money from our bank accounts. Well, where is the problem? There is no problem. So it was the first consequences, very, very big, really, very big, and we are challenging this every day. So lack of trust to the pension system. The second consequences, it's, of course, from the more economic point of view. I mean, when we have to sell equity, it means that we have very that there is no more institutions that can buy it from us. So actually, our clients are losing, and it can be seen. It also means, when we are forbidden to buy treasury bonds, that there is no other institutions in Poland, such a huge as us, that may buy those treasury bonds. So we have a foreign buyers, and our foreign debt is higher at about 4 to 6% during the last few years than it used to be before. So we are more depending on foreigners than on ourselves naturally. The other consequences was more political. It was one of the reasons why the government and the previous party lost their elections, and it is said very loudly. So you can also look at this from this point of view. Actually, right now, the former government very loudly says that it was a mistake, and then should take another steps, some another economic changes, and not to demolish open pension funds. Actually, last year, Platforma Obywatelska presented a new act in which they are trying to privatize money, all the assets in the pension funds. I mean, they are saying in this proposal that what you have in pension fund, it's your private money and no public money. So it's interesting step. And replacement rate, as it comes to the pension funds, when we look in 2014, it's very low in Poland. You may look in EU statistics, also other research, which is showing the replacement rate for retirement. It's about 28% for men, about 20% for women in Poland. So it's also going to be a huge problem in the next years, especially when we are going to face demographic changes, probably similar as you in Poland, we are starting to facing them in the next 8 years. So all those factors was the impulse for the new government and the Ministry of Finances to think about what we should do with the pension system. we have 50% of assets in pension funds. We have very low replacement rates. We have people which are not very satisfied with our pension system. So what can be the solution? Should we, totally demolish capital market? Or maybe we should do something to help everyone, including our national economy and capital market as well. In 2016, something called the Strategy for Responsible Development appeared. It was prepared by the Minister Morawiecki. At that time, he was not the Prime Minister, he was responsible for Ministry of Development. In this program, which is a very wild program, it covers many different sectors. However, there were two very important, from our point of view, changes. One of these regarded pension funds, and the other creating a new solution which was supposed not to be a typical part of pension system, but it was supposed to boost long-term savings in Poland, because the level of long-term savings for retirement in Poland is one of the lowest in the whole European Union. There were also some other solutions presented in that strategy, creating a new infrastructure bonds, presenting REITs on the capital market, reducing gain taxes, and as it comes to offer, it's important to mention the government at that time proposed to privatize 75% of assets, to put them into individual accounts which will be still managed by the pension funds in a little bit different form, but it will stay with the pension funds, and 25% would be moved to the social security institution and still as your accounted as your money for the retirement. It was discussed, it's been discussed with us, with the pension funds, with the sector, and we agreed for this proposal. As it comes to the PPK, this new solution, which is so-called employee capital plans. It's not rocket science, it's nothing new, it's been already functioning in New Zealand, in UK. It's similar to something that they have in Canada and Holland. Finally, our government decided to look more closer on UK and prepare the draft of the legislation which gives us PPK. It is a solution on which employer will be obliged to create a pension plans, a program for its employees. Each employee will be automatically in this plan. However, will have a time to opt out and to resign. It has 4 months for this. And the state additionally is participating in this plan by paying some money. So as it comes to the employee, it's decided that he will be paid 2% and may additionally decide to pay 2%. Employer will have to obligatory pay 1.5% and additionally may pay 2%. And you will get from the state 250 zloty as a entrance welcome. And then each year, if you will have to, if you will put your money on this, you will get additional 240 zlotys from the government. It will be managed by private institutions, and I wanted to emphasize that discussions on this started in 2016. During 2017, we had many different public debates, including institutions, financial institutions, private, public one, employers, trade unions, tripartite committees, different ideas for a level of participation, how should it look like. And the first draft of the act appeared in February 2018. And during the whole year, it also changed a lot. And it also changed a lot because we were invited and really listened as a sector. We tried to show good and the bad ideas, how it's going to operate. And as an example, I may say, which is very important for us, at the beginning there was only a national institution that was supposed to offer that product, and after 2 years a private one were supposed to start offering. But after discussions with the government agreed with us that it will be better to have more institutions that can offer, so private institutions are allowed to offer this program from the beginning of its opening. So that kind of many changes were introduced since the February 2018. At the end of 2018, the Parliament agreed for the act, and in December, President signed the new legislation. It came into force this year. So we are actually in the middle of preparing ourselves to start running the institution, to start running the program. The employers in July will have 3 months to decide with whom they would like to cooperate on this program, which institution they will take. You can also see that not from the beginning all the employers will be engaged in these programs, so only the biggest one, only those who employ more than 250 people will have to sign the agreements on this and will have to open the programs. The smaller will have to start it in 2020. So the benefits you can, separate. There are benefits from the client's point of view, of course, higher replacement rate. I tried to show you this. It's been prepared by the PricewaterhouseCoopers estimations. And even if they will decide to put only 3.5%, it will give them at about 11 up to 15% higher replacement rate comparing to what they will have without this solution. As it comes to the capital market, as I mentioned before, our stock exchange doesn't look as it used to look 10 years ago. We were talking that we had more than 120 IPOs, and right now there is actually no IPOs. Everyone is waiting for the next year when the program will start running, because these programs means additionally about 15 billion zlotys year to year, which will come to the stock exchange and to the capital market. So it is an opportunity from the economic point of view, because we look at the stock exchange as a possibility to boost economy and our companies, especially small and medium one. And at the end, I would like to tell you that it is not the only thing that the government is trying to do right now. We've started discussions regarding this second solution about which I mentioned at the beginning. I mean changes in the pension funds, this moving 75% to the private accounts and 25% to the Social Security institution. But also a few days ago, it's been appeared National Capital Market Strategy, a new solution prepared by the Ministry of Finances, concentrated only on the capital market. There's going to be 5 huge goals. One of them is to additionally, not only by using employee capital plans, but also additional solutions that we already have in third pillar, and to change them to additionally boost long-term savings for retirement. So it is a very important solution from our point of view. Many other as well. This plan should appear at the end of this month, so I believe that it's going to be till the end of this week. It's also been already discussed with us, with institutions from the market, and already are putting some suggestions from our side. So I think that right now we are going to the better, at least, direction that we used to in a few years ago, and we see that those changes that happened in 2013 were not good. And also the government, the previous and the government that we have now is clearly seeing this, because the capital market started in 2014 in Poland really dying. So I think that those solutions, the capital market, we are actually waiting for them very closely and dramatically. Thank you a lot.
Thank you, Małgorzata. I think I'm losing my microphone. 1 second. I'll put it here. I think it's safer. And here it is. Do you have a? Oh yeah. Thank you. Thank you. And so before we start, can you hear me? Before we start the panel, I just wanted to show a few slides. And you have the pictures here of 2 individuals. I mean, one you see on the right, and one you see only his book. So the guy on the right, his name is Georges Doriot. Now, he may not be very famous, sorry for that, outside of the US, but Georges Doriot is actually the inventor of what people call the Silicon Valley. So he's the inventor of venture capital, business angels, modern entrepreneurship, the way we do IPOs, the way we list companies, tech stocks, high tech. To a large extent, he invented back in the 40s, 50s, and 60s. He was a scholar, an academic, and also a multi-billionaire, having invested early on in what became some of the biggest companies in the world. Another economics thinker is the author of this book you see here called Turbo Capitalism. His name is Ed Luttwak, and Ed Luttwak is actually American-Romanian, and he's also an academic. And he started as a military planner, just like Georges Doriot. So there's something in common between them. They both started as military planner and became economists. Georges Doriot is French-American, and Ed Luttwak is Romanian-American. I think he was born in the city of Arad, in the western part of Romania. And there's one thing in common in what they write and say. So to a large extent, you could call them ultra-realist. So their worldview is extremely realist and realistic. So I'm using the word realist as the opposite word to excessive idealism. And so you see in the middle this picture of the eagle and the dragon. So this is the new era in which we are entering, which you could call the era of geo-economics. And the word geo-economics was invented by that Romanian academic, Ed Luttwak. So that era with President Trump and Chairman Xi is marked by an extreme form of realism, economic realism, right? So not like the Cold War, where people focused on building the biggest guns and the biggest jet fighters, but a new form of rivalry where economic growth becomes the focus of governments, right? And so I'm going to say a few words about how capital markets, economic growth, are linked to that concept of national interest in the era of geo-economics. And I just want to start with a disclaimer. Sorry, I forgot. So I'm speaking in my own personal perspective. So everything I say is just my personal opinion. It is in no way the opinion of my association for which I work, which is called the World Pension Council. And if I say anything stupid or doesn't make sense, it's because I'm tired and jet-lagged and sleep-deprived, so please forgive me in advance if I offend anyone. But without further ado, so I want to say a few words focusing on four notions. I'll say that the old world has ended, and so we're entering a new era, once again, the era of geo-economics. One of the things that is characterizing that era is, sorry for the microphone, is the Chinese-American rivalry. And we'll see that a country like Romania is very well placed geographically and economically to profit from that rivalry. And I'm going to say that asset owners in general and pension investors in particular will play an increasingly important role in that new era. So we'll see that it's vital if you want your economy, your national economy like Romania to succeed in the future, you need to have a strong second pillar pension. Without that, you're not armed to fight in that new global race. And why is it the end of an era? So the era which is ending is the era of excessive idealism or excessive neoliberalism. You know, open market, open borders, and at every social and economic issue, you just need to wave the magic wand of free markets. It's partly true, but it's partly naive, and that's why we are now entering another era, which is much more realistic, with this notion of national interest, you know, self-interest first, right? That, you know, someone like Trump would call it, you know, America first, someone like President Xi would call it China first, or the Chinese dream, but basically, that new paradigm is really on the rise, and so we are moving out of that, you know, old paradigm. So in that new era, pension funds will play a much more important role. Why? Because pension funds are, by definition, long-term investors. So if you are a pension investor, you're really investing with a 5, 10, 15 years horizon. So you look for long-term assets, and by definition, we are here today invited by the Bucharest Exchange. The ideal long-term assets by definition is a stock. You know, when you buy an equity, normally you are here for the long term. All the more, if it's an IPO for a small cap and mid cap, your goal is to watch that small cap become a mid cap, and the mid cap become a blue chip, and make money by being a long-term investor, right? So pension funds, it's really sticky money. It's not people who are there to speculate like George Soros or some, you know, prop trader. They are long-term investors. So if you want to accompany the economic growth of your nation, if as a government you want to attract foreign capital, the ideal kind of capital, be it domestic or foreign, is really pension capital, because these people are not here to buy a Romanian share or bond for a few weeks or a few days and then sell the money and run. They are here as faithful long-term investors. So it's the ideal, basically, source of capital if you believe in the long-term development of your national economy, right? And so I think that's going to be a very important point I'm going to make. So that's, you know, that's in a few pictures the symbol of that new era. So this is really an era. Some people call it a new Cold War, a new global rivalry, but basically people are fighting over scarce resources, and capital is a scarce resource. And we're seeing an acceleration. Remember the title of the book by your compatriot, Ed Luttwak, Turbo Capitalism. What does it mean? That all these phenomena that we observed are really accelerating at a very brutal pace, right? So it's really important to keep that in mind. Now, who are the pension funds? Be they Romanian second pillar pension funds or foreign pension funds from Toronto, Montreal, New York? They are long-term asset owners, right? And so here you see the old man on the left with the cane. He symbolizes the pension investor, right? Now, at the very end, on the right-hand side, you have the companies, many of them listed companies, and in the middle, you have sometimes the pension funds will buy directly shares and bonds. Sometimes they will give investment mandates to these guys in the middle, who are the fund management companies or the asset management companies, right? And if you go to London, to the city of London, if you go to Paris, to Frankfurt, if you see who owns most of the capital of the biggest German, French, English companies, very often it's not the local German or French or English pension funds. very often you see the capital of the biggest companies in Paris, Frankfurt, and London are controlled by these gigantic American, Canadian, Australian pension funds. So really, you could say that in that world, which is becoming more and more competitive, that aggressive race for, that rivalry, that very dynamic form of capitalism, the countries which are succeeding in that new world are very often the countries who have a strong second pillar pension sector, and the flip side of the coin, the countries that don't have a strong second pillar pension sector are the ones losing. But it's not only losing in the sense of, who owns the capital, because you could say, okay, fine, the Canadian pension funds, they own bridges and highways and airports in England or France, who cares? But it's not only the issue is not only ownership, it's also the issue of economic growth and job creation. And as we see here in our next chart, this is a chart where one of the flags, actually 3 of the flags, had to be reduced in size. Otherwise, they would have taken the whole space you see on. So the American flag had to be reduced a lot, and the Australian and Canadian flag also had to be reduced. So the size of the flag symbolizes the total size of the assets owned by all the pension funds in each and every country, right? So as you can see, maybe the French and the Germans are proud of being, 2 of the 3 biggest economies in Europe, but if you see the size of the French flag and the German flag, they're very small. It means that the second pillar pension system in France and Germany is actually very small, which in the long term will not be healthy for the future of the French economy or the German economy. If you look at the x-axis, that axis here is the annualized real economic growth in the past 6-7 years. So as you can see, Italy has a very small second pillar pension, and it's now into negative growth. Some of the most successful, most rapidly growing economies in the world, Chile, Israel, South Korea, Australia, Switzerland, Norway, they have a very strong second pillar pension system. So you can almost say that there is a strong correlation. So not only is it a question of national sovereignty, of really control, power, political power, it's also a question of long-term economic growth, but not only. If we look at Romania now, quickly, in the past 11 years, since the creation of the Romanian second pillar, the annualized net return for your average second pillar pension fund here in Romania, net of all fees, has been 8% per annum. Not bad. Many European countries, including France, the annualized net return is more like 3.5%. Now, the fees, the fees are fees that are, capitalist fees. So if you are an investor into the Romanian economy in any sector, including the pension sector, you expect to have a return on investment, right? But look at the fees that were taken by these second pillar pension funds in the past 11 years here. Not all the money was returned to the investor. A lot of the fees are actually meant to hire, to pay, and to train highly skilled national experts. And in the futures, these skills in financial economics, asset management, fiscality, statistics, econometrics, all these skills were created to a large extent. They did not exist in Romania 11, 12 years ago, or they were very small. It's really amazing what the presence of second pillar pension has done to the economy, because hundreds of young Canadian MBA, young Romanian MBA graduates, young Romanian economists, young Romanian accountants were trained as pension investors, financial analysts, auditors in the past 11 years. And now you have a thriving investment community with very sophisticated skills, precisely the kind of skills that will be needed for an economy like Romania to succeed in that global race in the future. Now also, roughly, I think the sum total of the equity portion of Romanian pension funds today, it represents approximately, I think, 15 or 16% of the shares listed on the Bucharest Exchange, right? Now, that is money that is not owned by some foreign capitalist. It's money that is managed by Romanian subsidiaries of foreign financial sector groups, but these 15% are actually owned by Romanian middle class and working class employees. So it's really something that is really serving a purpose of national ownership, because if all these companies are owned by middle class and working class Romanian employees, it means that unlike George Soros, unlike the prop trading desk at Goldman Sachs, these people are faithful and they like their country and they want to be invested in the long run. They're not here to short a stock or buy a stock overnight or over a week. So it's the ideal kind of investment money. You want investors to be long-term, but not only that. If you want to attract foreign capital, foreign direct investment, right? If you want, who are the biggest investors in the world? Well, these guys, you know, the American, the Canadian, the Australian pension funds, they own 50, 60% of the capital of, you know, if you look at Microsoft, you know, Microsoft, Google, BMW, IBM, the biggest companies in the world, who owns the capital? These guys. And so if you want to attract them and you want to incentivize them to come into Romania to buy bonds issued by the Romanian government or to buy stocks issued by companies, what they do is they look at anchor investors, especially when they invest in an emerging market, Eastern Europe, Central Asia. They look for anchor partners. If they come to a country like Romania, these big American, Australian pension funds, and they see that there are local second pillar pension funds in Romania investing in stocks, private equity bonds, they feel reassured because they have anchor investors locally, domestically. They can put more money on the table. God forbid, you know, God forbid, if the second pillar, pension system in Romania disappears one day, in the future, when there is an IPO of a company at the Bucharest Exchange, in the future, when the government of Romania wants to issue bonds, these investors will say, "Oh my God, that country, they don't even have local anchor investors. It means the country is risky. It means me as a pension investor based in Montreal or Toronto or Sydney, I'm going to think twice before investing in that country where I don't have peers. You know, peers are people like me. They have the same, you know, CFA degree, the same MBA. We can talk the same language. You know, we can come to Bucharest, visit them, and maybe invest jointly with them. If the whole second pillar pension sector disappears overnight, that will have huge consequences, and these consequences will be much, much bigger than just pensions. So it's not about only pension funds. It has deeper ramification. It has to do with educating young executives and policymakers in Romania with the most demanding, most sophisticated skills that are needed to thrive in the world economy today. It has to do with foreign direct investment. How can you attract foreign investors, be they Chinese or American? Because today, maybe in Romania, today there are like 500 or 600 members of the CFA, right, association. This year, in Shanghai and Beijing, you have thousands of graduates preparing for the CFA exam. So that's really the language of the future. So even a communist country like China can understand that. So it's vital to keep those skills alive here in Romania. So I think, you know, I'm just throwing at you some ideas as an introduction to our session today. And I think those were some of the points I wanted to make. And I hope my microphone will hold for the rest of the session. Thank you very much, and we can start the discussion. Thank you. Yeah, and I'm also the moderator, so one more reason why I hope my microphone will stand. Yeah, sure. So before you pick up, I'm going to let each and every one of you just say a few words, present himself at the beginning, and then start. So go ahead. Yeah, pick up and see who you are. Yeah.
I am just picking up the microphone, that's all.
Okay.
So my name is Ana Bobirca, and I represent here Coalitia pentru Dezvoltarea Romaniei. That would be Coalition for Romania's Development, which is a platform reuniting the most relevant business associations in Romania, as well as chambers of commerce, bilateral chambers of commerce. Thank you.
Hello, my name is Koen Vlemings. I'm Director of Research at the Federal Public Service of Social Security in Belgium and member of the Pension Reform Commission there. And for the last 4 years, we were also asked by the European Commission to assist social protection reform and notably pension reform in the People's Republic of China.
I'm Liam Kennedy. I'm Editorial Director at Investment and Pensions Europe, which is a publication. We've been around for 22 years, started in 1997. So as such, we provide information and reporting and in-depth coverage of pension systems around Europe, around the world, including the investments that they make. And as such, as a publication, we're scrupulously independent. One thing that we do represent and we do defend is the concept of capital funding of pension funds, and we can provide ample evidence of the benefits of that. And I look forward to commenting a little bit further on some of these very interesting points that have been made.
Hello, my name is Alexandra Smedoiu. I represent CFA Society Romania. I am Vice President of this association. Thank you for speaking so nicely of the CFA designation. Actually, we are considered an association which gathers very technical people, so we are very happy when we have the chance for our voice to be heard.
Hi everybody, my name is Radu Hanga, the President of the Romanian Fund and Asset Management Association.
Good afternoon, my name is Matti Leppälä, I'm the Secretary General of Pensions Europe. We're the voice for funded pensions at European level, representing 24 national pension fund associations, both in second pillar and third pillar, and also the Romanian pension funds.
Hello, my name is Cristian Nacu. I'm Senior Country Officer of IFC, member of the World Bank Group, the largest developmental institution in the world.
Hello, I'm Radu Crăciun, the President of a private pension association in Romania. It's a professional association who puts together all the managers of private pensions here.
Right. Well, since Radu has the phone, that microphone, you may want to start by giving us your view, as to why being a pension investor in Romania, about the social utility basically of your work. I know you have a blog and you wrote many blog articles about that recently, right?
Well, that's a nice surprise to find out that you're a reader. First, I think I need to bring an important clarification, because at the end of the day, the questions many people might ask, what are we talking about the potential disappearance of Pillar 2 in Romania? Because there was no law, right, forbidding the existence of the Pillar 2 in Romania. There was no one who came in public saying, as of tomorrow, there will be no second pillar pension in Romania, which indeed is true. I mean, it's clear nobody did that. But nevertheless, there is a problem. And I think the chief economist of the central bank in the morning raised some red flags, and rightly so. Because I think what's important to mention is that the recently released emergency ordinance 114 last year brings some very important changes which are going to have a dramatic impact on the private pension managers and question at the end of the day the future of the industry. There are two important things which came out with this ordinance and which changed totally the landscape. One is related to the significant cut in commissions that managers are allowed to charge. From this point of view, Polish managers were, let's say, enjoying much more generous terms in terms of commission, we have to say that, compared to us here. But nevertheless, despite this, the commissions have been cut almost 5 times. Of course, huge impact on the future revenues of the pensions.
However, this alone maybe would have still not prevented the system to exist. But what's probably even worse, much worse, are the very, very significant requests of additional capital, the minimum capital which is required to be brought by the managers in the future, lead to an increase of 11 times compared to the current existing share capital. And this is basically jeopardizing the whole picture, the whole business plan, which everyone had when decided to invest here, because you know one of the key measure of an investment everywhere in this world is return on equity. And bear in mind, on one hand, the return is going down because commission is going down. On the other hand, equity is going up just because the capital requests are much higher. Consequence is that return on equity for managers will drop somewhere at about 3–4%. Is it much? Well, it's equal to the yield of a treasury. Treasuries are risk-free. So, of course, a shareholder could ask himself, why should I bother to invest in a service-providing industry like managing private pension funds instead of buying treasuries, as long as the return is the same? Of course, you want a premium for the risk you take, and the premium is no longer there. So, therefore, I mean, there is a lot of concern, of course, regarding the future decisions which shareholders will make, because shareholders want to be rewarded for the risk they take, and this reward is measured by the return on equity they enjoy in this. So therefore, my hope is that actually we are going to see a change in the ordinance as it looks now, because indeed I think that the private pension funds have two main roles, and it's a dual role, a role regarding the future wealth of the population when it retires, and then of course you have the second main beneficiary, which is the economy. And I think there were brought so many proofs until now in this panel that for me it's useless to explain all the benefits. What I'm nevertheless sad about is the fact that I feel that we here in Romania tend to reinvent the wheel all the time. So we ignore all the developed economies who enjoy, after decades, strong private pension system and question the reason for having a private pension system, although we see in the Western Europe so many success stories. We question the impact of the private pension system on the stock market, although we have so many examples of strong impact of the private pension system on the stock market. By the way, Poland used to have the highest number of IPOs in Europe at some point in time. And it's precisely due to the existence of a strong private pension system. You heard, no longer, right? So basically, we don't have to be trusted for what we are saying. If someone has goodwill, it's enough to look around and to see plenty of reasons why the weakening of the private pension system is going to have a negative impact on the economy. I'll stop here.
Thank you, and that's a great transition with Cristian Nacu of the World Bank. And I'd like to ask you a question about basically, you know, being a supranational, having a supranational perspective. Perhaps tell us a few words about, you know, your view on that link between, you know, asset ownership, private sector, second pillar pensions, and long-term economic development in emerging markets and developing economies.
Thank you. First of all, I would like to say that as a development institution, our role is to support always the development of the country. And therefore, one of the top priorities for us has been always to develop the stock exchange in the countries where we are present. By doing that, we recognize the role of the stock exchange as one of the pillars of the developmental of a country, and we supported from the beginning when the pension reform has introduced in Romania, and we supported the development of the private pension funds as being one of the ways to develop the stock exchange. And during our existence in Romania, for example, we continue to support developing different instruments, introducing innovative instruments on the market in order to boost the development of the stock exchange. For example, only in the last year, we've invested 120 million in Banca Transilvania bond Tier 2 capital Basel III compliant bond, tradable on the stock exchange, or in tradable bonds issued by two real estate companies. Also, two of our companies where we were shareholders were encouraged and supported to do an IPO in order to grow, to continue their growth, and we were very proud to be very successful IPOs. One is my friend here, Mihai, is in the room, MedLife, and the other one is Purcar, the winemaker from Moldova. So all these have been actions that we have taken, and we will continue to take to develop the stock exchange. Now, regarding the recent developments that Radu was mentioning, our position is that, and I'm trying to be as diplomatic as possible, such measures should be taken only in consultation with all the stakeholders involved. We believe that macro stability is important, and therefore for macro stability it's important also the predictability of the fiscal regime and of the laws in general. I was very sad when I saw what happened in Poland, and as Radu mentioned, unfortunately we are not looking to other experiences, similar experiences. To a certain extent, something similar happened also in Hungary. All these should have been lessons that we should learn. As some of you know, in my previous activity in a private equity fund, we were one of the beneficiaries of the development of the stock exchange in Poland. Many of our exits in that time were done through the stock exchange, and I was looking very jealous to Poland having 100+ IPOs every year, and in Romania at that time there were none. For many years there were none. So it's a pity that we cannot learn from such lessons, and as I said, it's a pity that we fail to do a proper consultation with the stakeholders before taking any decisions with such a macro impact. Thank you.
Right, and I think it's Matti's turn now, and Matti is not only the managing director of the European Association of Pension Funds based in Brussels, but he's also from Finland, and I think before that you were the head of the Finnish Association, right, of pension funds, and Finland is a case in point. It's a country, relative to the size of Finland, where the size of the high-tech, innovative sector in the economy is actually quite large, and the number of IPOs in the tech sector is also, or was for many years, higher than average. And I think in Finland, some of the earliest investors in these tech stocks that are today the backbone of the national economy were, to a large extent, pension funds, right?
Yes, Nicola. Reflecting on Finland, which I'm not going to do much, I would say that the Finnish pension industry is crucial for the development of Finnish economy. in all parts, in times of trouble for investing in government bonds, and in better times investing in listed equity, as well as then into startups, venture capital and private equity, and it has been crucial. And I would think that the same is very true for Romania and other markets as well, that the capital markets really need strong local investors. And I think that the Romanian example has really been a success in pension system, in funding for pensions. I think Romania has been a success story. Of course, the nature of the system, that it is mandatory, has contributed to this. But the coverage rate of the coverage of how Romanian pensions cover the people in Romania has increased tremendously, and is a very good level in comparison with many other countries. So that is really crucial, because when we look at the projections of the contribution of the supplementary pension part to the pension income of the Romanian people, it is going forward on parallel to the social security system. So the same amount is to be received for old age pensions from the supplementary pensions as it is from the social security pensions. And from Pensions Europe's point of view, having good different types of parts of pension system is crucial. You have to have a good social security part, you need to have a good second pillar, and it is very helpful if you have a good third pillar, because you are posed to different types of risks with the different parts. And I think for the supplementary pension part, which relies on funding, it has also been very successful. The real returns of the funded pensions have exceeded the growth rates of the real economy. So it pays to invest in the real economy and have better returns than to put the money into circulation in a pay-as-you-go system. So if that were not the case, then funding would not make sense. But in the case of Romania, clearly in the last 10 years, according to the OECD statistics, the real returns have been 9.5%. Of course, last year and year before have been a different story, but that's for all pension funds. For the longer term, 10, 15, 20 years hopefully, it proves to be very successful and important in dealing with the huge liabilities that Romania has because of the demographic change. The challenges of the aging of the Romanian population are one of the highest in Europe. So it is, in my mind, really crucial not to bank the future on the first pillar alone, but to have also other strong pillars and a strong second pillar which exists in Romania to go forward. And then, of course, as Nicola said, instrumental is that the money is invested into the real economy, and with local pension funds, it will be also the local companies, and that enables then for the startups to grow something big, as was the case in Finland, for example.
Thank you, Matti. And now to Radu, who will tell us about the interaction between the pension industry and the fund management industry.
I would take a look before at the bigger picture, and I like very much what you presented, Nicolas, talking about the link between the development of the pension sector, the pension system, and the economic growth. We all know about the connection between the economic growth and the development of the capital market. So now we have all three pillars linked together, talking about growth of the economy, a strong pension system, and I'm not talking about the second or the third pillar, I'm talking about the pension system as a whole, and the development of the capital market. All of these are linked. Of course, the pension system, it's a significant part of the whole story, because if we talk about the capital market, and all the companies which were listed know that depends on the availability of the long-term capital. Long-term capital is provided mainly by pension system, because there you're looking at longer term, you're investing for the longer periods comparing to the asset management industry. So we are talking about sectors which are hardly connected. either if we talk about the stock exchange, pension system, asset management industry.
Right. Thank you.
Thank you very much.
Thank you.
To add to what Radu said, I think we need to look a bit further. And what do I mean by this? I think this is not only an issue about the stock exchange, about the pension fund administrators, not even about the pension funds themselves. This is a story about how do we want to see the Romanian society in 10 years from now or 20 years from now. This is about the greater good of all of us. Because I'm looking in this room and I see a lot of familiar faces, and I realize that whatever we do or say largely remains among us and is not public, shared with the wider public. And these are things that we really need to communicate. What is the Romanian society doing, or what is each individual doing, or what it should be doing for its retirement security. And I'm a strong supporter of the mandatory saving scheme, in this case the private pension scheme, because we as humans, we do not have this in our genes, the saving attitude. And sometimes these kind of lacking attitudes can be corrected by something which becomes mandatory. For instance, you know, when there was gasoline with lead, and this was very damaging to the health, but it was only demonstrated years after. It was only removed because it became compulsory to not use lead anymore. When we realized that CO2 emissions are harmful for us again, we did not do a lot of things until someone said it is mandatory that you do this. Why don't we accept this fact that we need to do some saving, it is for our retirement, and a mandatory thing in place, it's a good thing to have. And this is not because just saving is good, it's because we are, as a society, we are now in a different stage than we were 20 or 30 years ago. We are now heading towards an older population. There's a European Commission study which says that by year 2030, so in more or less 10 years from now, 1 in 3 persons will be older than 65. So we will all go on the street, and the third person we see will be a retired person. So the pressure on the public system will be huge. So if we don't do this for us now and for the future generations, what will happen is, again, the burden will be on us, because there will be higher taxes in the future, because someone will need to support these retired persons. And I think here the main issue is about trust. I'm hearing the example of Finland and all the Nordic countries, which we all know and we all read about. They have wonderful social security system. And I try to explain myself very, very simple. Why does this happen? Why are Finnish people or Danish people so happy to pay 50% of their salaries to go into the social security system? And the answer is only one. It's about trust. These people, they pay a lot of their income because they trust that the state will provide them with good health and with good social welfare when they retire or if they become ill. In Romania, we don't have this trust. There are a lot of people, and probably you heard everywhere, you go on the street, you go on the market, you speak to your friends, they are only speaking about how not to pay so much taxes. There are a lot of people who receive their salaries in cash, so they don't pay taxes. It's because these people and the larger society doesn't trust that the state can do good for them with their money. So this is the real issue. And our society, we believe that we need to rebuild this trust, and we can only do it by going into public debates and involving all the stakeholders and explaining what the real issues are, what will be Romania's issues in 10 years, 20 years from now, and what can we do from all perspectives. not just increasing taxes, but maybe other measures as well. Yeah. So this is the real problem with the current legislative changes, because they change the rules of the game as we speak. Yeah. So there was a system created, there were some rules created. Now we come with new rules in the middle of the game. So this is very hard to understand. And this again creates an issue of mistrust. If you tell people that pension administrator need to put in 10 times or 11 times more capital, then a regular person will ask himself or herself, why? Is there some risk that I need to know about? Is there a real risk in the whole system? So it only perpetuates mistrust, and this is very, very wrong.
Thank you. And now to Leon.
Well, thank you very much. I'd like to pick up on Alexandra's point about trust, because I think trust, stability, and continuity are three very important components of pensions policy, any financial or long-term policy. Pillar 2 capitalization, Pillar 2 funding was a policy that was adopted throughout Central and Eastern Europe. It was a policy aim in other parts of the world as well. It was in the 2004 election campaign of George W. Bush. It wasn't enacted in the United States. It was enacted in Sweden in a rather different form. It is the policy. It is the system that countries like Romania still have, notwithstanding outright nationalizations in other countries. Poland and Hungary have been mentioned. As I mentioned, policy continuity is extremely important. So any kind of backdoor attempt to change the rules of the game, as seems to be going on in Romania at the moment, seems like a fantastic opportunity, no doubt, for the government to achieve its aims. But what a short-sighted achievement that would be, as has been outlined earlier by our keynote speaker. In other countries like Poland, the existence of the capitalized second pillar has provided not only a long-term policy for the welfare of individuals, of many millions of individuals, and also provided stability and an anchor to long-term pension policy, as well as providing foundations for economic development, which is, of course, the subject of our session this afternoon. But it's also provided short-term stability in times of economic stress. Don't forget the severe economic constraints that governments all around the world were subjected to in the years following the great financial crisis, 2008 to 2009, which in some ways has precipitated some of these policy actions. The existence of a funded mandatory pension system providing liquidity to hundreds of businesses, of listed companies throughout the country in places like Poland was a real benefit to the economy, and I think it's one that has been shown in the overall growth and economic performance statistics of that country. So any attempt at nationalization, I'm not sure whether we can call it that, but policy changes of a short, well, of a backdoor nature will be, I think, detrimental to trust and confidence in the Romanian economy as a whole. It is extremely important, and to emphasize the point that Nicholas made earlier, that creating and maintaining a long-term pension system is something that other countries aspire to. It's one of the metrics internationally when pension systems are graded and ranked, as in the Melbourne Mercer pension rankings. And if these factors are absent, I think it sends out a very poor signal, not only domestically but also internationally. I don't think that every pension system is perfect. Probably every pension system has a lot of imperfections, but perhaps it would be as well for people in this country, in wider Central and Eastern Europe, to look to the ways that other countries internationally are seeking to perfect and mend and improve their pension systems. And auto-enrollment in the UK has been one policy that, for instance, Poland has looked to as it now seeks to repair the damage in the pension system that was created in prior years from 2013. You see countries like China with huge demographic problems that are introducing lifestyle funded pension components to their financial system and seeking to do that at the moment. And other countries like France, for instance, which have traditionally relied on insurance to provide long-term savings vehicles. Now that we have Solvency II, insurance companies are no longer buyers and holders of large amounts of equity. It really is down to pension funds to be long-term investors. And in many cases, I think that pension funds are really the long-term solution to the retirement problems that we all face. That's pretty much a bullet point view of the points that I wanted to make, Nicholas. So happy to come back to any of those later.
Thank you, Liam. And now on to Koen, who has many hats. Not only is he Belgian and Flemish, but he's also a member of the EU-China Board of Experts on Social Security and Pension Reforms. I think you can give us a Chinese and Belgian perspective, I guess.
Well, as far as Belgium is concerned, about 10 years ago, we were well on our way to make second pillar pensions mandatory. And we are very different from the Netherlands from a pension perspective, in the sense that we had a very undeveloped second pillar sector. Third pillar pensions were very popular on the other hand, but the second pillar was really underdeveloped. And in the Netherlands, of course, you have the system of mandatory second pillar pensions. And so about 2001, we wanted to stimulate the second pillar pensions by promoting collective agreements on a sectoral level that included pension plans. And so we introduced a new law with some fiscal incentives, and it was hugely successful in the first couple of years. The first 5 years, most sectors introduced in their collective agreements second pillar pensions. So that was a huge success. But the success was slightly slowed down by the financial crisis in 2008. And so especially because, of course, collective agreements are also concluded with the unions, and there are already some ideological constraints, and so that process slowed down. But nevertheless, we have now, at this moment, almost all sectors have collective agreements with pension plans. The ones that were lagging behind were the public sector, where there are contractual workers. And so now there are plans to introduce, well, very developed plans, the laws are already written, to make the second pillar pensions available for contractual workers from the public sector. And then we will have more than 90% coverage of our pension funds, of our second pillar pensions. Now, we have elections in a couple of months, so it's a bit, we're looking forward to what this will bring. In my introduction, I said we had a pension reform commission about 7 years ago. 4 years ago, the government agreed to implement the reforms proposed by our commission. 4 years later, we see that there was especially a lot of cherry picking in the plans, so they were not fully implemented. And so there has been some delays, and now we have decisions that put some of the important decisions to that were postponed until the elections have passed. So we are a bit now looking how this will happen in the next few years. The important part is especially that the second pillars in Belgium are still underdeveloped, in the sense that people contribute very small amounts to these second pillar pensions. And so we were trying to, the main goal is to push it up until 3% at least. And they were never meant to replace or the first pillar pensions, but even in 2001, the idea was to at least push, to provide a small supplement to pension payments due to the increasing consumption aspirations of elderly people. But still, the main issue in Belgium is not that people are not covered by the second pillar, but the main issue is now that so little has been invested in it. And so in contrast with third pillar. Now for China, well, 4 years ago, bringing the experience from Belgium, all the Reform Commission experience, I participated in the preparation of pension reform in China. Of course, they have many pension experts in China. The idea was to introduce a chapter on pension reform in the new 5-year plan. We succeeded in getting some paragraphs in it. The most important innovation was the rural pension plan, and then somewhat later the abolishment of the civil servants pension, in the sense that the civil servants pension has now been made identical to the employee pension plans. But the big problem in China, well, there were several huge problems pension-wise. They introduced in the 90s the World Bank propositions of the pillar pension system. However, 5 years ago there were some important problems. They are especially developed on the provincial level, and where you had some wealthier provinces, such as Guangdong Canton, the rich port region, where it was a huge success. You had other provinces where there were many problems. Some of them were due to fraud, but not always, but also inexperience in management. And so it was notably, they talked about the problem of the empty accounts. So in basically people, in some regions they had been paying first pillar pensions out of pension funds. So that was one of the issues. Now the central government in Beijing has decided to solve that problem and to solve the issue of these empty accounts. Now it's time for the next 5-year plan in China. And so we will see now, I've been invited to go there before the summer, once again to sit together with various pension experts in China to see which direction we will be going. I think, well, due to the fact that there are the wealthier regions in China have quite well developed second pillar pension funds, and so I think that, so in that sense, I think that China will continue in that road, and but we will see what will happen in the next few months, because I've been wrong before with the 5-year plan, but at least there are so many different issues.
Merci Koen, and now on to Anna. Merci.
Thank you. Your speech inspired me, so I will try to introduce, let's say, a different perspective, not necessarily a new one. There is an acronym that the world business environment is using these days to describe itself, and this acronym is VUCA. You've probably heard of it. V stands from volatility, U from uncertainty, C from complexity, and A, ambiguity. And I think this type of acronym is becoming highly relevant for Romania these days. It does describe the environment, the business environment in Romania, and I think this is the reality that we are all we are living in, starting to live in, and going to live in. The question being, how do we prepare, or how do we get fit for this type of very uncertain, very unpredictable, highly ambiguous and complex environment? I would dare to say that at the level of Coalitia, we have, let's say, discovered by doing and by constantly learning some sort of preconditions to navigate through these turbulent times and environment. And these preconditions, I think, would be, first of all, to focus on the real economy, meaning the businesses that are represented in the Coalitia, because if we don't understand the structure of our economy, we certainly cannot come up with public policy, and we don't understand how the system works. Then, something that has been mentioned several times before, that would be to communicate timely. Speed is becoming of essence, and honestly, I would add, involving more stakeholders, although stakeholders is a word that is intensively used these days, it is of relevance, is increasing the quality of the outcome that we hope to have from this dialogue, because this is where the expertise is. And then, as a consequence of this communication and as a consequence of the quality of communication, I would say collaboration, because this is the only way that policy formulation can become efficient. Thinking in silos and working in silos is not going to help us, because we know that, especially at the level of the financial markets, realities are interconnected. So this type of thinking can no longer work, and we have the proof now.
So do you do advocacy and lobbying with MPs, with Parliament?
Yes, we did. I would stick to advocacy. For now, we don't really understand the meaning of the term lobby, so I will refrain from going there. But yes, I think advocacy would be right. And I would just add that because inside of Coalitia I represent the Romanian Businessman Association, I think it's of essence to keep mentioning that Pillar 2 is actually Romanian capital. And it is a highly important chunk of investable capital as equity. And if we look at the structure of the Romanian economy and at the capital structure of most of the Romanian companies, it's easy to see that they need this capital in order to survive, most of them, and then obviously to grow. So I would say that from this perspective of Romanian capital, which is scarce, we know it is quite scarce in Romania. If we don't nurture it properly, we are going to waste our chance to still have a comparative advantage. We were relying on labor so far, but we all know that labor is now becoming scarce and expensive and not properly skilled for some of the competencies that we are developing, which means that this type of local Romanian developed capital needs to be taken care of properly and through putting together our thoughts and expertise. Thank you.
Thank you, Anna. And now, last but not least, Lucian, who's the president of the Bucharest Exchange. I want to ask you a question about basically the intellectual capital, you know, educating and training experts in Romania.
Financial education.
Yeah.
Please allow me to go closer to our audience. And also I'd like to thank you very much, because I'm one of the hosts together with our partners. And again, I'm very, very happy to have you here. For the audience, I would like to say that you have in front of you representatives of the most important pension fund industry associations in the world. So you have here representatives of the most important associations regarding this field. And we heard very interesting and very important thoughts. I hope the message will be sent, of course, via media. And before saying a few words about financial education, please allow me also to thank everybody, because this brilliant panel here
You can't see this every day in Romania. And again, I would like to thank very, very much to MedLife and for this helping us to create this wonderful event. I'd like to highlight some thoughts, only a few of them, very, very interesting, but for me was extremely important, and please correct me if I'm wrong. For example, the chairman of Polish Private Fund, Pension Fund Association mentioned the following, that one of the main reasons, second pillar, confiscation of the half of the second pillar, the treasury bonds, was one of the main reasons for losing elections. Am I right? This was the losing elections in Poland. This was one of the main reasons for second, cutting half, taking treasury bonds, 51% of the assets. So I think this indeed might be a news here in Romania. Also, congratulations to Poland for boosting long-term saving habits, and it's a kind of reloading the private pension fund pillar. Congratulations for this. This was, I got it right, the Polish government is paying 250 zloty, the entrance welcome bonus. This is, you know, zloty is equivalent, almost equivalent to Romanian leu. So imagine a government in Romania then opening a second pillar, granting you 250 zloty and 250 RON and 240 zloty per year? Per year, each year, and another 240 each year. So it's kind of, you know, different worlds, you know, totally different worlds, and this is kind of acknowledgement that Polish government did a huge mistake in 2013 when they cut half of the second pillar. This was what you mentioned. Am I right? Yes, thank you. Then Nicolas, also very interesting for me, was that that Romania is losing financial sovereignty without second pillar, due to the fact that we will rely mainly on external capital and not on local capital. This is, in this environment, in this world, it's absolutely a very tough statement, extremely tough statement. Nation sovereignty, it's important. Financial, I would say it's very, very important. And also, last comment, it's from Radu Crăciun, who mentioned then that return on equity, it's critical for existence of the second pillar in Romania. Am I right? This was the statement. And it's normal because in any financial sector, return on equity is the most expensive and scarce resource. So it's very difficult that a shareholder, a financial shareholder, to add, and especially in large quantities. And regarding financial educations, indeed, it's a kind of like working for roads. You need to work all for quarters, and it's not enough. And this is our goal, Bucharest Stock Exchange, together with the financial sector, together with with entrepreneurs, to increase financial education, because this is our strong belief. We here in Romania will live much, much better if we'll increase our financial literacy in Romania. And I hope here all of us to do more compared to what we did in the past. And because we are running out of time, I would like Nicolas to finalize.
Thank you, Lucian. I think the panel has still time for a few questions, right?
We do have two questions. The first one, it's from me to Malgorzata, because as I understood, you are happy with the current pension reform in Poland. You know, you have to check, you can't be 100% sure when you're dealing with the state, that everything is fine?
I am happy that the government see, comparing to the last changes, the potential of the capital market and financial institutions and its role in this. And yes, we are happy, we believe that this reform, it will be a new opening and it's going to be a huge education program.
Okay, please tell me, how did you succeed to turn around the government point of view? Because this
it's very
can
hard.
be very
it's very hard.
useful for
I mentioned, and the colleague from CFA emphasized it even better, I think, because, and also another voice about the trust. And the lack of trust among our citizens as it comes to the pension funds and new and pension system and new ideas concerning pension system. And you know, every journalist during each meeting ask or try to say that, you know, it is a new project. But actually, after what happened in 2013, I don't believe that at the one point the new government will not decide to do the same. So there are a lot of different solutions in the act in which they guarantee that the system is private and the money are private. It's even written directly in the act that the money on the accounts are a private
I presume that you
owner.
have had discussions and tried to convince the former government that they are going on the wrong path.
Yes.
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 And the elections were the only thing that changed the state of things in Poland.
Unfortunately, I believe that politicians has a very short way of thinking, only between one and the second elections. And if they're cooperating with the good economists, which are influential, they can show a big picture, it's easier for them to understand. Or if that kind of mistake that happened in 2013 in Poland has a negative influence on the economy. It happened in our country, so that's why I believe new government see what happened and wants to change it on one hand, and the people just you know, they were frustrated that the government is doing something with their money, with their accounts. They wanted, like, people from Germany to own some companies, but the people from Germany are through the investment funds on pension funds buying houses in Poland through Warsaw Stock Exchange. So it's the difference between the thinking in Poland and in Germany, right?
Thank you very much. And short answer, please, to the following question. Someone in the room is asking. Actually, there are two questions, but with the same key thing in it. A short answer I would like. The question is like this: what measures can we, investors or simple citizens, can take in order for the state not to touch our money, not to nationalize the Pillar 2 fund pensions? Starting with Radu Crăciun.
Well, as far as I know, there are associations who protect consumers in the service, in financial service industry as well. So I think that this association exists. If there is enough pressure from the public opinion, then they should activate, and then basically represent the interest of these people. We as an industry, we had as an objective to defend the interest of our participants, but always we are suspected of being an interested party as well. So therefore, sometimes decision makers question our objectivity, let's say, in what we're doing. So maybe having an independent association which defends the rights of consumers in service industry maybe would eliminate this suspicion.
Thank you.
Yeah, I would like to respond. If we look at the success of countries like the Netherlands or Sweden or other Nordic countries, it goes to the structure, the civil society in these countries, or the Belgian example we heard. And there, for example, Romania does not have the same structure with the social partners and collective bargaining. So these structures, civil society structures, are the ones that provide for the trust and to the long-term policies, for the consensual policies in many of these countries, which are best examples of good pension systems. But when that doesn't exist, you have to do other things. Of course, the design of the pension system is up to the member states. So it is, in the end, it's a democratic situation. From the European perspective, very much Europe does not want to get involved in the national politics of this. But in the end, of course, the structural problems that result from not managing the pensions become a European problem within the European family. So it is a very difficult situation how much to involve others than the national decision makers. But in the end, it is democracy. Hopefully, democratics are respected, democratics decision-making is respected, and people are heard, and people are aware of the issues, and institutions can act freely in defending the interests of the citizens. That is important, that in the society you can voice your different opinions, and the people are free to decide for themselves, and reliable information is openly provided.
Thank you. Please.
I would say the key point is communication. I think, as Radu said, when we talk about pensions, especially about second pillar, there are at least two parties involved, the fund managers, but also the state as the provider of the funds. So I would say it's not productive state of fight between the parties. It can only work through dialogue and through cooperation, and this system have to be designed together by the private and the public sector, the state.
Thank you.
Thank you.
Is someone else there willing to answer? Please. Yeah.
Thanks. Well, this is about people's long-term future. I would say the 25 billion RON saved up in the capitalized second pillar is a national asset, and I would say that is a great achievement of this country, echoing some of the comments that have been made. And I would say if people were so minded, and were it to come to some of the more extreme measures that have been made and taken in other countries, you know, social media, hashtag hands off our 25 billion RON, that might sharpen the attention a little bit.
Thank you very much. Anna?
Yeah, please.
Well, we have many governments. Yeah. We have a federal government, we have regional governments, so we have in total more than 4 governments. But anyway, well, I've just been writing about, we are celebrating this year our 75th anniversary of the social pact that provided the basis of the development of our system of social negotiations and of our social protection system. And so the agreement between employers and employee organizations to work together in the management of our economy. So they made an agreement during the war, negotiated in clandestine situations, people being arrested, bombs falling on the country. They negotiated a pact where social partners, unions representing workers and employers decided to conclude an agreement to work together to manage our economy. And so I must say that now, 75 years later, it's more difficult. It's much more difficult to, apparently, to find an agreement. And the same is true for the political parties. In the end, we mentioned that it's a democracy, and we vote for the people that we want in power. And so it's important that we choose people that are taking their responsibility and not only thinking on the short term. And it's in Belgium, the voters have become much less stable than in the past. In the past, we had a pillarized society, and so political parties were quite stable. And so it has become much more volatile now. And so I've been having a similar frustration in the sense that in our case, why didn't they implement our reforms? And so I've been thinking privately, like, what can we do about it? One solution would be to have all the democratic parties make a pact together because in the end, pensions are the long-term lives of people. It's a lot about sustainability. It has a lot to do with the social and economic dimension, but it's long-term. And you have to make an agreement a consensus agreement of what you want to do with that future. And but to be honest, I think it has in Belgium also not so much chance to get a successful agreement between political parties, because it's a democracy, and pension reforms and pension plans are part of the political parties. The way that political parties identify themselves and play in these elections with what they think is the truth. And so that makes, it's important to have a democracy, a well-informed voters that vote for the people that take responsibility for their futures.
Thank you very much.
Thank you. I think I will partially repeat myself, but I will say intensified communication, that is essential at this point. Then a unitary message, that is also essential, I believe. There is no silver bullet. It just means hard working and engagement in order to convince everybody and involve as many stakeholders as possible. If we address the entire business environment, I think Coalitia is such a measure, for example. This is also a measure. Most of them are dealing with communicating more in order to decrease asymmetry, spread financial education, and hope for an outcome. Thank you.
Also, I believe in dialogue. This was also my message in the first panel. And on medium term, I think Romanians need to improve financial education. And this is for each of us. And after this step, to start to help our families, our friends, our neighbors, our colleagues in our offices to improve their financial educations. Because this is the only way how we could survive on long term in this aging population world. And second advice might be to start saving more than their parents did, because times are changing. Thank you so much.
Thank you very much. Thank you, Nicolas. Thank you all. Please.
I'm sorry, I was listening and looking at our experience and listening to what you are saying. Well, from the experience, I know that trying to show meritorical, economical arguments, which are very important, right, and for logically thinking people reasonable. But I'm afraid that in some moments, some points, politicians are not thinking in a realistic way. And from that point of view, I would suggest a little bit different communication and to look a little bit different on this. In Poland, for example, pension funds are investing more than 30% in new technology companies. CD Projekt is one of the famous companies wide world. We have the more than 35% we are owners more than 45%. So if we can imagine that we all work for CD Projekt, and now the government is coming to you and saying, you know what, we are taking this 35% from the company, which will mean that, in fact, you are coming back to the, I don't know, socialism. You are working for the government right now. Would you like something like this? So maybe we should communicate for people in a simple way what may happen. If there is not going to be stock exchange, pension funds, long-term investment, it means that you cannot talk in Romania or in Poland about new technologies because banking don't invest in a risky business. And new technologies is very risky business. Banks don't invest in highways, in new airports, because it's too long investment. So who will do this? Who will? If not the capital market. So a little bit different and more simple, I think, point of view may be better because it will engage everyone from the audience and outside, not only us who are, well, we know what will happen if this will happen for you. Okay, thank you.
So, get out from the bubble. Yeah. Thank you very much, a very good point. Before finishing today's event, we will have a very short pool that we've taken through our app, and we will show you our results because there are very interesting results. And after that, I will ask my colleague Cristian Hostiuc also to join us on the stage. In 5 minutes, everything will be over. So please, our colleague, if they can show us the results. The public, and I will switch to Romanian. Publicul a putut să răspundă la câteva întrebări în fiecare panel de astăzi, iar rezultatele, în unele cazuri, eu le-am văzut puțin mai devreme, chiar se meciuiesc cu ceea ce am auzit astăzi pe scenă. Iată prima întrebare. Care ar fi motivul principal pentru care te-ai lista la bursa de la București? Și da, într-adevăr, extinderea business-ului, intrarea pe noi piețe sau lansarea de noi produse. Însă și publicitatea văd că îi atrage pe mulți dintre antreprenori. Și al doilea slide, și răspunsurile sunt la fel de interesante, dacă deții sau conduci o companie, care ar fi cea mai mare temere în fața listării la bursă? Ei bine, aici vedeți rezultatele. Lipsa de lichiditate, de fapt, este cea care îi sperie pe mulți în primul și în primul rând, și apoi fluctuația pieței. Sunt niște rezultate chiar interesante. Astea sunt bune atât pentru cei care lucrează la bursă și care trebuie să le explice celor interesați punct cu punct, să le adreseze aceste temeri, dar și celor care deja joacă în această piață de capital, care pot la rândul lor să preia acest rol de a educa publicul, atât investitorii simpli cât și cei din fonduri mari. O altă întrebare, la fel de interesantă. Iată, Credeți că va supraviețui pilonul 2 de pensii ordonanței 114? 40% spun că nu, în timp ce 60% cred că da. Nu, acest rezultat, ce ziar publică acest rezultat? Interesant este, așa cum ne spunea și colega noastră din Polonia, cum veți explica dumneavoastră, cred, celor din România, pe înțelesul tuturor, dacă cei 40% temere se adeveresc în realitate, ce o să avem dispărut de pe piața din România. Sunt concluziile acestui summit. O să îl rog pe Nicolas să tragă concluziile discuției de astăzi. If you have some conclusions for today's discussion, please, Nicolas. And after that, please. Sigur. Dacă putem să dăm înapoi un slide. Ia să vedem. Ok. Îmi cer scuze, așa este. Mai devreme, când încă nu se încheiase votul, știți care era? Erau îngrijorați de schimbările legislative. Acolo era majoritatea celor care se temeau. So, Nicolas, conclusions.
So if I had to give you a personal, once again, personal opinion or conclusion, it's think to the word Romania. I think Romania as a name comes from Rome, and I think the language, compared to Italian, French, Portuguese, is a sister language, it's a Romance language. And I think we have wisdom in the words, or the government should consider that there is a lot of wisdom in the words they use. And many of the words we use in economics, finance, and policy making, even in English, are actually Roman or Latin in origin. One of them is pension, of course. One of them is government and minister. And one of them is expediency. And so in Roman law and Roman politics, expediency is when you make a short-term, short-sighted, hasty, too fast decision when dealing with a long-term issue. And so pensions, the stock exchange, stocks, investment are crucial, vital, long-term issues. The worst kind of policy is when you deal with pensions and investment and stocks and finance using short-term political considerations. It's expediency. And Roman senators, Roman politicians from 2,000 years ago used the word expediency to describe that. Expedite, you move too fast. It's the worst kind, the worst possible kind of policy when you are a policymaker, be you socialist or liberal, it doesn't matter. Expediency in itself is very bad. Government is also a Roman word. I think you have it also in maybe Romanian. The guvernai. When a captain is on a ship in the ocean, he uses that tool to govern the ship. That's the origin of the word, the root of the word government. So it's a long-term voyage. It's a long-term trip. Life, every human being has a life expectancy of 60, 70 years. It's like a ship on the ocean. The ship has to last that very long journey. And that's why when you're steering the wheel, this is the meaning of government, steering the wheel on the boat. You have to do it very delicately. And when you move that steering wheel brutally, you will crush the boat onto the rocks. So I think, my message, once again, as someone who likes Romania, as someone who has sympathy for the Romanian government, is to steer the wheel of pensions and stocks and investment very delicately. You don't want to move it too drastically, because once again, you will end up making potentially hugely negative consequences in the long term based on very short-term considerations. That would be a very big mistake for Romania, I think. Hopefully that won't happen. And I want to believe that the government will be wise enough to steer the ship very carefully.
And let's hope that the ship isn't Titanic also. No? The mic, please. And the last conclusions, I will ask my colleague Cristian Hostiuc.
Concluziile mele, toți așteaptă și voi toți care sunteți partea acelei industrie, așteptați, de la stat să vă înțeleagă, ceea ce aveți rezultatul, așteptați de la fondurile de pensii, ceea ce mi se pare o contradicție extraordinară, adică bursa în esență este capitalistă și să așteptați de la fondurile de pensii, care a fost până la urmă o decizie a unui guvern obligatorie de a da niște bani din niște salarii unor fonduri de pensii care să administreze. Adică dacă bursa de la noi așteaptă totul de la fondurile de pensii, mi se pare că nu înțelegem capitalismul. Asta este părerea mea. Nu aveți o poveste. Pentru mine mi se pare tulburător cum a venit fenomenul Bitcoin și dacă statisticile noastre sunt corecte, undeva la vreo 200 de milioane de euro s-au dus în Bitcoin. Deci Bitcoin care reprezintă nimic, adică este doar o poveste că va fi o monedă să fac niște bani și bursa sau retail-ul de la bursă nu reușește să atragă toți acești bani. Adică mi se pare ceva incredibil și eu îmi pun această problemă, de ce? Adică cum de Bitcoin care a apărut de nicăieri sau Ethereum sau vorbeam cu niște, să zic, niște dezvoltatori imobiliari care obțineau prea puțin din investițiile imobiliare și băgau banii în Bitcoin. Și am zis, dar n-ai bursa? Și se uitau așa, ce să fac la bursă, că nu înțeleg. Adică nu știu unde este, a cui trebuie să fie această educație financiară. Bursa nu cred că spune o poveste. Poate a spus-o acum 2 decenii sau bursa din București pur și simplu nu spune o poveste. Fiecare care așteaptă de la altcineva să spună această poveste. Mă uitam puțin aici, nu știu dacă concluzia mea, antreprenorii români, cei care nu sunt deja listați, nu vor să creadă în bursă. Ei spun, da, luăm în considerare această posibilitate, dar finalul este, nu sunt atât de convinși. Și nu știu cine trebuie să-i convingă. Dacă voi care sunteți partea industriei, respectiv fondurile de pensii, primul pilon, după aia celelalte fonduri de investiții, bursa în esență, nu reușește să-i convingă pe acești antreprenori români, că reprezintă o bună alternativă pentru finanțarea lor atâta timp cât au proiecte de finanțare sau pentru cheșuirea propriilor investiții, să-și lichidizeze portofoliul, atunci cine ar trebui să-i convingă? Cred că este bursa sau toți cei care sunt în jurul bursei, dintr-o dată au devenit sau ați devenit, și cu noi presa, ca să spunem așa, de specialitate, un club închis, burghez, în care trăim din rentele trecutului sau din rentele pe care ni le dă statul, cum este pilonul 2 de pensii. Și suntem un club închis. De aia cred că nu penetrăm sau nu penetrați la nivelul societății. Aceasta toată lumea a spus și Lucian spune educație financiară. Păi cine să facă educația financiară? Și cum să o facă? Cine? Noi, presa? Noi trebuie să dăm, spunem așa, la ea, exemplele pozitive și negative. Nu cred că misiunea noastră, sau eu nu mi-arog această misiune de a face educație financiară. Da, fac educație financiară dând exemple și pozitive și negative, dar nu cred că este misiunea mea. Ca și presă, ca și ziar financiar, sau ca ziarul financiar, să facem această educație financiară. Mă uitam puțin așa, din panelul unde am fost eu moderator, cei mai nervoși erau cei de la Digi, MedLife și Purcari, nu? Pentru că în sinea lor nu cred că bursa a fost așa o opțiune extraordinară, adică poate au avut alte așteptări, cel puțin Digi de la bursă. Și sunt Digi și MedLife, sunt societăți care achiziționează alte companii în afară, nu? În Ungaria, cum spunea Bogdan de la Digi, domnule, noi avem 1 milion de clienți în Spania și piața nu ne recompensează. Adică fiecare își pune problema, dar de ce? Adică ce rost are să fim aici? În schimb, ceilalți care stau de partea cea la baricade, e un fel de, e bine. E bine. Dacă luăm dividend de 15%, 10% e ok, dacă luăm 1% este ok, pilonul 2 de pensii n-are niciun sens să mișcăm acțiunile atâta timp cât companiile noastre nu acordă aceste dividende extraordinare. Și Radu Crăciun, să există o presiune din partea opiniei publice. Nu cred că opinia publică trebuie să facă această presiune. Nu cred că e misiunea ei. Voi, ca și administrator, dacă nu vă bateți, în primul rând ca și societate, atunci cine să bată? Adică mă uitam la pilonul, la ceea ce s-a întâmplat, Raluca Țintoiu. NN Pensii n-a luptat deloc. Serios, a luat decizia ASF-ului ca atare și asta e. Mai departe, cei 6 administratori, Radu a fost avertizat, ok, cel puțin public, restul 5 administratori au stat foarte bine. Ce dom'le, dar eu de ce? Dacă administratorii nu se bat pentru propriilor lor membri, atunci cine să bată? Eu? Opinia publică? Mi se pare că suntem aici și cu noi presa, sau cu mine, ca să spunem așa, în care așteptăm să vină de undeva, cineva. Poate polonezii fac mai mult și au făcut mai mult, de-aia sunt și aici. Dar cred că piața de capital din România a devenit mult prea devreme o piață extrem de burgheză și rentieră.